Handling objections is like the 101 skill when it comes to being a good salesperson in the mortgage industry. We know that objections are going to come up, and I get asked this all the time. There's so many things I get asked all the time, but these ones are big. It's like, how do I handle objection? Specifically more around like insurances, but there's actually 3 main ones that I get asked a lot, and I'm going to unpack them today, because if you don't understand how to handle objections and how to deal with objections, you will lose income. You're going to lose business. And you're going to really hate your job as well, because you'll feel constantly under attack, which is what that state is. You'll feel very stressed and anxious because people are always kind of questioning you. So it's not a great place to be. And so there are ways you can do it. So we're going to unpack the 3 main ones, which is, why should I pick you as an advisor? Why do I need insurance? I just want a mortgage, that old chestnut. And then we're going to look at commissions. So how do you get paid? Why are you paid by the lender? You're paid by the lender or the proc. Like, we're going to do proc, insurance, and fees, and talk about that as well. So these are kind of the main 3 that come up, but we're going to unpack those. I'm going to give you an example of how I would do it. Now, before we dive into them, the main thing to understand when it comes to objections and the way that I approach objections is with what I call radical honesty. It's the radically honest approach. Now, I know this myself when I saw this in many years ago when I was a mortgage broker based in an estate agency, was that when I was radically honest with them and just told them the truth, they would say yes. When I was trying to somehow manipulate them into saying yes because I was trying to win the sale, they'd say no. And I learned that quite early on. I was when I was annoyed and in a bad mood, more and more people would say yes. And when I was trying to be a good salesman, I would struggle. So from where does that stem from then, with this idea of what am I talking about here, is to be a good salesperson and overcome objections. The goal is not to win the sale. You're not trying to win the sale, beat that person into submission to agree with you and take your products or your services as a broker. That's not what you're trying to do. The actual goal should be about making them get closer to making a decision. And the decision, we talk about this in the discovery call within the Mortgage Business Mastery system, is this idea of a fit check. It's a fit check to see if we're a good fit to work together. And that's the goal. You're not trying to say, I'm going to use me as a mortgage advisor. You're trying to say, I want you to decide if you want to use me or not. And I want everybody to be able to move from an indecisive state, to a decisive state, to make a decision, to be able to be very, very quick and like yes or no. And no, by the way, is a decision. And so if sometimes the answer is no, that's okay. In fact, that's a win. I would chalk that up to a win. If someone's like, why should I work with you? You do the pitch. Do you know what? I don't want that. Brilliant. That's a win. That's not a negative. The way that I see it in the system, the way that I look at it, you don't have to win them all. You will not win them all. Okay. But if you see it this way, you will win significantly more because of the way you are and how honest you are. So that's kind of how we're going to approach it. So let's put something in practice and let's unpack a few. So let's talk about the first one, which is, why should I pick you? So if someone asked me, Ash, and I was a mortgage broker, and they said, well, Ash, why should I pick you? I've spoken to 10 other advisors or 5 other advisors, and they're telling me they can do X, Y, and Z. So tell me, and I love this one, tell me why I should pick you. That kind of sell yourself, which by the way is awful. You don't want to be selling yourself. That's the worst thing to do. So we're kind of going to do a bit of a kind of counter maneuver. Anyone, when like someone punches and you kind of counter it and go, okay, cool, let me do this. So how would we do this? Very easily. We would say, okay, so realistically in our industry, we are a heavily regulated, I don't know how much you know about this, but we're a heavily regulated industry, regulated by the FCA. And what that means is if you're speaking to an independent financial advisor, somebody who's got access to what we refer to as representative of whole of market, that means they have access to pretty much every deal on the market that you can get from a broker. So anyone who's telling you that they have better deals, and it doesn't really make sense to me why they'd say that, because we all have access to the same stuff. So firstly, I don't understand why someone would ever pick their broker based on some sort of deal, because that's not really a smart idea to do. You just need to understand it. The other thing then as well that people always, why should I pick you, is people then think about fees, and they think about, should I pick somebody based on what they charge and how that works. Now, realistically, to be completely transparent with you, Mr. Customer, what it's going to be when it comes to fees is every broker who is any good is going to charge a range. And they're going to charge between, say, $495 to about $795 as a mortgage broker fee. That's kind of the going range for good mortgage advice. You're going to charge that much. Now, anybody kind of below that fee, truthfully, it's questionable if they're any good, because Below that fee is not really what the industry kind of normally recommends. And anything above that fee of like 795, it could be good, but that's usually going to be more bespoke, more specific situations for specific individuals. That's quite hard to get. If you're in a normal vanilla case, you probably wouldn't be going for that. So, but anywhere within that 495 to 795, that's kind of the average fee. So no one's really going to pick based on those fees. They're all kind of roughly the same. And I know this myself, because if people talk about this, they're going to say, look, realistically, you're buying a house. You're not making a decision based on someone charging 495 and someone charging 695. Like, you're just not. Like, stamp duties and all that stuff, it's so significantly larger. No one's making a decision based on that. They might think it is, but we all know that's kind of an illogical decision to make. That doesn't really make much sense to do that. So I know you're not doing that either. So then it just literally leaves us as, well, if we're not picking on product, because that we're all the same, we're not going to pick on fee, because realistically, fees are all roughly the same for good advice. They're all roughly within a kind of ballpark of about a couple $100 of each other. So what do you pick someone on? Why should you pick someone? Well, you should only really pick an advisor based on, do you think that they are honest, trustworthy, have your best interests at heart, and more importantly, do you like them? Do you feel like the person is actually out for your best interests and you want to speak to them? And if that's the case, and if I'm that guy, great, pick me. But if I'm not that guy, don't pick me. Now, the only question I'd have to you, Mr. Customer, is, why have you spoken to 5 other people before me? That would say to me that there's something about those that you don't trust, or that you were maybe not made aware that this is really the only decision factor. You see that, pause, come back off that, is that's how you would do it. Now, what are we doing here? Anybody who has said, I'm an exclusive deal, they're going to look rubbish instantly, because now it's like, yeah, you just pulled the rug. We've been radically honest. Same with a fee. We're saying to them, you're not going to seriously pick somebody based on £100 or £200 on this biggest, most important purchase of your life. Like, of course you're not. And also, truthfully, by the way, of course you're not. Like, it's a dumb thing to do, to not do that. Do you know what I mean? So, of course, you're not going to do that. And then what you're saying is, so you only pick someone based on their radical honesty, and that you like them, and that you feel like they've got the best interest, which, by the way, we've just subsequently done for the first two, knocking down those first 2 objections. So that's how I would handle, why should I pick you? So let's talk about the second one, which is, why do I need insurance? I just want a mortgage. I love this one. So why do I need insurance? I just want a mortgage. So the first thing I'd say with this one, I'd say, okay, going to be honest with you, don't really get asked that question that much, so you kind of blindsided me a little bit there, but it does happen sometimes. So I'll explain it for you, so hopefully you can understand why it's so important to have this. So when you take a mortgage, what you're actually taking there, we call it a mortgage, but what it really is significant debt. It's a large amount of debt that you're taking, which is why I will use the word significant. Now, with significant debt comes significant risk, because if you're unable to pay that debt, you are going to be screwed. They will take your house from you. And so that's very, very important. So first of all, look at protecting that. It would be irresponsible of anybody to give you something without the means to be able to pay it back if something bad happened. And anybody not talking about that's kind of crazy. They should be talking about that. It would be irresponsible of the broker, be irresponsible of me. It would be silly to do that. But it's not just about the mortgage, because the mortgage is only you can only buy that house because you have an income. And we talked about this before. 30% of your income goes towards your mortgage, but a further 30 to 50% go towards your actual lifestyle. And living in the house is why you're there. You're there to live. So you need to be able to live. And so we need to protect the most important thing, which is your income. If the income stops, everything else stops. And so that's really probably the most significant risk of all, is the income. So I would, of course, and anyone who's any good would look at protecting your income first and then protecting the mortgage. And that's how we would do that. It would probably be irresponsible, like I said, to not do that. My job is always going to be to eliminate all financial risk for you, especially if especially, forget budget, that's banned, especially if, we have the available funds to do so. I'm always going to recommend you do that. And I'm sure you can understand why that would be the case. You wouldn't want to take something knowing in the back of your mind that you are really just kind of building a house of cards. So why do you need insurance and you just want a mortgage? Truth be told, the two of them are the same thing. You should really have them both. We've just got into this world where bad brokers and bad actors in the industry have split them apart, truthfully, because they just don't have the balls to talk about it, and they're just a bit scared about the rejection, which I'm not bothered about because we're having this conversation now. So that's another way of doing it. So it's radical honesty. Radical honesty. What we've done there, by the way, again, is highlighted. We constantly do this. For at the beginning of this, we open it up with this idea of saying, I don't get asked this a lot. That's really important to do, because what you're saying when I don't get asked this a lot is you're saying to that person, they instantly feel like it's like, oh, wait a minute, I'm actually an outlier. If you say, I get asked this all the time, don't worry, you're actually validating it. But what you're doing when you say, I never really get asked this, or this doesn't really happen very often, they instantly feel a little bit on the back foot, like, oh, I've just said something I probably shouldn't have, and I maybe look a bit silly. So you are adding that in. Great one with this, by the way, is on things like on other ones with like commissions and stuff. And if you can really be good, if you think it's reasonable, you'd say, do you know what? I've never been asked that before. You threw me off guard a little bit, but I can explain to you. But I've never, and you laugh, I've never been asked that before. That's actually caught me off guard. And what that does is instantly make them go like, oh, maybe I said something wrong, which you want them to feel that way. The other thing as well is we're also highlighting it would be silly of you to take on a mortgage without insurance, and anybody not talking about that is dumb, which again is your competitors. Now let's talk about the third one, which is commission. So this one here is what we'll do. There's two kind of with this one. So it's why do I pay you a fee if you get paid by the lender? So this is one of my favorite ones of this. Why do I get paid by you? Why would I pay you when you get paid by the lender? So what you'd say with this is, look, it's very straightforward. This is a miscommunication that's gone in our industry for years. You pay me for advice and recommendation. The lender, however, is a completely separate relationship, and they pay me for administration and taking the legal responsibility for the advice I've given to you on their behalf. So in other words, the lender pays me because it's cheaper to pay me than it is to pay someone to sit in a bank and do it for them, because they're going to pay that person 40, 50 grand a year. They're going to pay me a small percentage. You can see on the KFI, they're going to pay me that. But that's just to cover administrative costs and me keying in the and working on their behalf as that. But the advice fee, the broker fee that you're paying me, that is for my advice and my recommendation to work on your behalf, to source the market, to find the best deals, and to act in your best interest. That's what that is for. So they are two very separate things. When people say, oh, I get paid by the lender, it always raises questions to me is to the fact that that doesn't actually make sense in our industry. You are being paid by the lender for administrative stuff. So in other words, are they truly acting in your best interest? I'm not saying they're not. I'm just saying that that's kind of the idea of it, is that you instruct me to work on your behalf and be your advisor. The lender thing is a separate thing between me and the lender, completely separate really to your mortgage in regards to your needs. So they're two different things, and people again don't really talk about that. That's a whole separate thing. So that's how you deal with that one. Now let's talk about another one with fees. So with insurance premiums. So let's say someone looks at their insurance premiums, and we see these ones, and I've got like a client, let's say they're doing like £190 a month. That makes you like between say 3,800 to say 4,500 pounds commission. Let's say it's 4,000 for this. They look at that and they go, wow. They go, gosh, you're making £4,000 on that, which doesn't happen often, but you're making £4,000 on that. Why are you getting paid so much for my insurance? You say, look, I'm going to be really honest with you. You say again, look, completely honest with you. And this is where you ask this one. This is where I'd say this. You say, do you know what? No one's ever asked me that question before. You really caught me off guard with that. But it's a really good question, and I'll answer it. It's very straightforward. So I get paid a commission to sell you insurance. As you'd expect, it's a business, it's sales, and that's what we're doing. You get insured, I'm the middleman, and I get commissions on that. So that's kind of given. You would expect that. Now, it seems very high, and it is very high. But the great thing about the great thing for you, and not so much the great thing for me, but it keeps the industry safe, and it keeps the industry honest, is that it says I get £4,000 there, but I get paid £4,000, and you have to keep that policy for a year, for 4 years. You have to keep that for 4 years. If you don't keep that policy, you cancel anywhere between now and 4 years, they're going to take the money back from me. They're going to take that back from me because they believe that it was potentially not mis-sold, but maybe misunderstood when it was sold. And so it is not in my best interest to try and sell you something that, one, I don't think you can afford, two, that I don't think you want, because it is going to always come and bite me back anyway. I'm going to lose that income. It's going to be way more paperwork and way more pain than it is for me to do that. So I do get paid, but I get paid if it fully reaches its maturity, and that you actually want it. So, Mr. Customer, my advice to you is this: do not take something in this call because you think I want you to take it. My goal is always going to be for you to eliminate all risk and take the whole lot, because I have a duty of care to you as my client to do that. However, if you take something that you think you will cancel because you're maybe not quite sure about it, be honest with me, because you're not saving anybody. You're gonna cost me money. You're gonna cost you money and time. It's not worth it. I'd much rather have a much more frank and honest conversation. So if you don't want that 190, you'd rather have the 120 because your idea is you think you might not be able to afford it, then let's maybe go with that one if that's the issue. You see, with that one there, with this specific situation, what you're doing here is you are highlighting that it's, again, transparency, honest transparency, that you're highlighting that actually if you do not get paid, you only get paid if it goes through, and they will stop that commission. So you're saying to them, don't do me a favor by thinking you're going to say yes and then cancel it later. It also makes it very honest and honest and transparent with them. But I also love this idea of addressing, yes, I get paid a commission for doing a job. I think there's this thing in this industry about like people getting paid to do stuff. That's kind of how the world works. So you address that with them. Yes, I get paid to do the job. I'm not doing it for free, but I also cannot just lug you with it, and then you just decide to, and then you just, don't want it. Because if you leave, I'll get hit with a massive clawback. So it's exactly the same open transparency. If you're open and you're honest with your clients, all objections can be handled very easily. The problem we have here is when we're trying to outsmart them and we're trying to outwit them, and that's when things go horribly, horribly wrong. Now, if you enjoyed this one, check out this video, which is a deep dive into my sales training and kind of how we maximize sales as a mortgage broker within the Mortgage Business Mastery system. Give it a click.